Is Austin's housing market about to crash or already past the worst of it? The headlines are a mess, the data is confusing, and depending on who you ask, we're either on the verge of a meltdown or about to boom again. So what's actually true? Stick around because I'm about to show you what most people aren't talking about and why waiting might already be costing you more than you think. Hey, I'm John Tips, and I'll site for almost 30 years. I run a small real estate team right here in the Austin area. And if you've been anywhere near a housing headline lately, you've probably heard it all. Austin's crashing. No, wait, it's stabilizing. Hold on, maybe it's about to go full .com bubble again. But here's the thing. Very few people are showing you the actual numbers, and without the numbers, you're basically just guessing, or worse, making life decisions based on clickbait. Now here's the part that might sting a little. If you've been sitting on the sideline waiting for home prices to nosedive before you buy or sell, you might already be late to the party. You know, like showing up at that 90s house party just as the DJ's packing up their CD binder and turning the lights on. In this video, I'm breaking down the real data from 2025, what it's setting up 2026, and how to actually win, whether you're buying or selling. Because there's a lot more happening under the surface than just prices up or prices down. It's not that simple. In fact, over the past year, I've had clients asking me the same 3 questions over and over again, like a worn out cassette tape. Is Austin still overpriced? Are prices going to keep crashing? Should I just wait until 2026? And honestly, I get it. The headlines make it sound like the Austin is one Fed meeting away from turning into a complete ghost town. But here's the truth. I've seen this movie before, a few times actually, and every single time the people who understand the numbers and actually acted on them came out ahead. So today, I'm showing you exactly what's happening in the Austin housing market right now. No hype, no doomsday countdowns, just straight data and what it means for your next move. And stick around till the end. I'm going to share one couple who went from waiting for the crash to locking in $30,000 in equity without hitting some magical bottom. But before I get into the details, I help buyers and sellers make smart strategic moves in this market every single week. Not emotional ones. If you want a clear, no fluff plan based on your goals, your timeline, and your numbers, call or text me. My information is in the description box below. Let's talk about where you are now, where you want to be, and how to get there without getting trampled by the trends. First up, inventory, aka supply. Active listings in the Austin metro area are up 20% year over year. We've gone from about 3.4 months of inventory to 4.1 months of inventory. Now compare that back to January of 2019, where we had 1.9 months of inventory. So basically doubled in 7 years. Translation, we're sitting right on the edge of equilibrium with a balanced market being 5 to 7 months of inventory. Now, not a buyer's market, not a seller's market, just balance. Now it really feels right now we're in a buyer's market where they have the upper hand. Think of it being like stuck in the middle seat of a road trip. Nobody loves it, but it works. And while it feels like supply is flooding in, most of that increase is from new construction. Builders are still playing catch up from the pandemic years, dealing with delays, higher costs, shifting demands. Now let's talk about what everyone's really watching, prices. The median home price in the Austin metro area, $432,000, which is just a decrease of 2% year over year. It's not a crash. It's not even a soft landing. It's more like the market just took a nap from being super high. Remember, we had a spike of 30% during the pandemic, and we have not had that drop over those several years. But here's what's really happening. Homes that are overpriced, they're sitting sometimes 70 plus days. Homes that are priced right from day one, they're selling in 30 days or less. If you're selling, this is not the time for ego pricing. If your strategy is, let's list it high and see what happens, what's going to happen is crickets and price cuts and more crickets. There are 2 categories of homes that are actually moving, deals and diamonds. If you're buying, this isn't 2010. You can't lowball like you thought your episode of Bargain Hunters, but you can get value, especially if you know where to look and how to negotiate smart. Let's look at demand. Is everyone gone? Did the buyers all move in with their parents? Not quite. Pending sales are up 11.2% year over year. That's a sign that buyers, especially the ones who sat out last year, are starting to step back here early in 2026. And here's the shift. It's not just about mortgage rates anymore. The real roadblocks now are affordability, confidence, because eventually people realize Life doesn't pause just because interest rates are annoying. Kids still grow, jobs still change, life keeps moving, so demand is rebuilding quietly, especially in the under 500,000 price point and in family-friendly suburbs like Hutto, Georgetown, and Kyle. If you're selling in those areas, your listing might already be getting attention. So where does this all lead us here in 2026? Bearing an external shock, 2026 is unlikely to be a year of dramatic price swings. We should see more predictable sales cycles, moderate price growth, especially in certain submarkets, a more balanced market with normal negotiations, and a return to seasonal patterns buyers recognize. These three economic factors will contribute to the Austin area growth across the board. Positive employment growth, albeit slower, in professional services, healthcare, infrastructure-linked sectors. The expansion of ABIA, Austin's airport, signals a long-term confidence in the area. Sustained capital investment in technology and advanced manufacturing. The bottom line, 2026 looks a lot less like a roller coaster and more like a gentle hill climb back to normal. And about the couple I mentioned earlier, they were convinced the crash was coming. Waited, watched, but after a few months of flat prices and rising competition, they jumped in. What happened? A great builder discount with a free rate buy down, $30,000 in instant equity right at closing. They texted me last week. So glad we didn't wait for a bottom that never showed up. So what should you actually do with this info? If you're a buyer, focus on value, not the mythical bottom. Negotiate incentives while they still exist. Builder perks, rate buy downs, closing cost contributions. These won't last forever. If you're a seller, price it right. First impressions matter. Make sure your agent is taking care of the marketing and is doing an excellent job. Be the best price option in your bracket, not the nice overpriced listing. And most importantly, stop letting social media doom threads run your financial life. The Austin market runs on data, not drama. If this video helps you clear up some of the noise around the Austin market, give it a like, hit subscribe for more no BS insight, and I'll catch you in the next one. Thanks for watching.